So today I'm going to be talking about benchmarking and data analytics, right? So I call it trimming the fat and trade review. So trade review is something that is very important to our team. In 2 years ago, in late 2018, we started building our own trading database. We call it a TMS. It allowed my traders to improve the most because of the ability for us to review everything at a glance. So normally we have a sense of what we call resulting, all right? So resulting basically is that if the result is profitable, it's a good trade. If the result is unprofitable, it's a bad trade. And this is where there's a little bit of a monkey wrench that I'm going to be throwing into you guys, because in trading, it's not about which one made more money. It's about whether or not you have followed through with the trading system that you have put into place. Because sometimes, actually a lot of times, part of your trading system is to replicate losers. If your losses look the same, that's actually a great trade. Just because you made a lot of money in a specific trade doesn't mean it's replicable. Don't get me wrong. I'm still happy to be able to get lucky from time to time, but just be in a position where you have to know that is it something that is realistically something you can replicate. All right. So the last question is, how do you know if you just got lucky? So this is a scatter plot, and I do this every single quarter of our hit and edge ratios. Okay. So the bottom axis is our hit ratio. Our top axis, the vertical axis, is our edge ratios. Okay. And if you look at the blue dots are every single trader that I have. Okay. The orange dots is the break-even number. So if I connect the dots with all of the orange dots over here, actually I'll just do that. Okay. So if I connect the dots, right? This is if you are under. We just finished connecting the dots. All right. So the reason why I do this is because right off of a glance, I already know which traders I have to work with, right? Because if you are under this orange line, it means that your net trading system is unprofitable, right? Net negative expectancy. It means that these, how many is this? Right? So 1, 2, 3, 4, and on the border 5, right? These 5 traders over the first half of the year have a net negative expectancy trading system. And immediately off the bat, I have to go in and spend some time with them to learn why they are in this ballpark. The ones above it, great. Congratulations, you have a positive, profitable trading system, positive trading expectancy. This is what I expect from all my traders, right? But here's the thing. Just because you're in that bracket doesn't mean that there aren't some traders that probably need some work, okay? So the first thing I look at is who are the people who are in this, what we call edge-dependent trading system. It means that these people have a poor hit ratio. Okay, so I'll draw this line here. So anybody in this bracket over here, including these ones at the bottom, have a poor hit ratio. It means that their hit ratio is less than 1:3, right? That means that you're closer to being right 3 out of 10 times. That's something of a concern, because it means that either the stock selection is poor, your idea gen is poor, you're not looking at market sentiment very well. There are so many problems that we have to address. So the first thing I look at is who are the ones that are trading below 33% hit ratio. And there are 4 of them. Okay, so this is an example of one of my traders, okay? I'm very proud of this one. She is a Caylum graduate, okay? And she's been with us for a few years already. And this is her first half number. So I'm very happy with where she was. She returned 13% for the first half of this year. If you look at her hit ratio, 47% hit ratio, 1.76 times edge. So she is this blue dot over here, right? Thumbs up for you, you know who you are. And 35 times churn for the whole first half of the year, okay? So when I do trade reviews, this is the first thing that I would do. And I hope you guys will go through with me. It's since you guys have a point of perspective of where they are, right? So the first thing I will do is I look at their hit ratio. Hit ratio at 47%, this is above average. You can see that she's in the territory of the far right section, which is generally pretty good. Above average, I'm happy to see this, all right? The next, we look at her edge ratio. So she's under 2. So this is something that, like I told you guys earlier, if they're under 2, the first thing I will look at is, how do we trim the fat here? How do we get this number a little bit higher so she can get into the 1.8 so above that 1.8 into the 2 territory. So when I look at her numbers later on, we will be able to see whether or not we'll make some adjustments and see whether or not she can pinpoint and clear some adjustments in that front. Okay, so this is the point of improvement right now. Churn rate, this is average. Like I said, this is about 6 times a month. So 6 months, 35 divided by 6 is a little under 6. This is pretty average, right? So nothing out of the ordinary. This is something that I would expect, especially with the lull period of March, April, and May. Okay, so not too bad on this front. Okay, so our final note here is we need to find a way to improve the edge ratio. And normally the easiest way to do that is to find out where the unnecessary trades lie. Okay, so we do this as a blanket. All right. All right. So Christopher asks, hello, sirs. Do you consider market conditions in reviewing your trades? For example, in my case, the past few months were really hard, especially with the volatility happening. And my trades were really sloppy because of the low hit ratios and stops being honored due to volatility. Any proposed solution for these kind of situations? Yes, we do take market condition into, you definitely have to take market conditions into consideration, but there are still non-negotiables. So you have to check in terms of your trade management. Are you following your trade management to the T? So we have this facility and we're able to do it per formation. This is all her trades for the first 6 months. Almost 194, I think. So normally the first thing that whenever we see something like this, it's a bunch of numbers, so major confusing, right? So the first box we look at obviously is where'd she make her money? That's, it's most straightforward, right? Where did she spend her time trading? Where did she make her money? And obviously it's sitting in 3 categories, right? She made 6.5 in momentum, 2,000 in pullback, and another 1,006 in blue sky. Okay, so if you've gone through the Caylum content, what kind of trader is she? Obviously, it's trend trading momentum. So the first thing you need to do when you look at your trades and you evaluate all of your trades is, where did I make my most money? That's the easiest way to identify an A trade is, even if I made money, did I make it in a manner where I'm happy with the return? So let's take a look at this one by one, all right? So 6.5, 56% hit ratio, excellent. 1.76 times edge. Obviously, this is exactly where her edge ratio was in terms of her in her scatter plot earlier, right? She was a little under 1.8, 176. So we'll give it a pass. Okay. Pullbacks, 21 trades, made $2,000. This is good. 42% hit ratio is average, but her hit ratio is average. Edge ratio of 2.82. This is excellent. Right? It means that she has a significant edge on this, even if the hit ratio was average. Blue sky, 57% hit ratio, great, 3 times edge, excellent. Okay, so this means that if I'm just doing a baseline, if she didn't trade anything else and just focus on these 3 trading formations, you have this the foundation of a great trading system immediately, just off of these numbers, right? So if you know her, please tell her, just message her, tell her that don't trade anything else. Ito na lang gawin mo. All right.